What's going on, everybody? We back. We're gonna try this again. If the webcam fails this time, I'm gonna ditch the webcam and we're gonna continue with the show. But appreciate y'all joining. What's up, Daryl? Appreciate you joining. What's up, Trump Swan? What's up, Ed? Third time is a charm. We gonna see, man. We gonna see. I try to reduce some power, all kind of things, but I'm running a Stream Deck. Are y'all familiar with a Stream Deck? I'm running a Stream Deck, so that might be drawing a lot of power. So I'm not for sure. What's up, Ryan? What's up, Excalibur? Definitely appreciate y'all joining back. What's up, Michelle? I seen you earlier said that you were brand new. I definitely appreciate y'all if y'all are brand new. If you're brand new, make sure y'all hit that like button. If y'all are interested in learning how to trade, click the link in the description below. That's the link to the Patreon. I'm teaching beginner lessons, and I'm currently working on my pro lessons. What's up, ZZ? They pulling all the extra strings. I don't think it's nobody tonight, ZZ. I think it's on my end. I'm not doing nothing. And then again, I could be wrong, but I'm not doing nothing no different than what I normally doing. Right now it's running pretty smooth. Hopefully it stays that way. If not, I'm gonna ditch the webcam and we're gonna continue rolling. Let me get a quick shout out. Shout out where y'all from, city, state, country, region, whatever y'all want to shout out. Shout it out in the chat. We're gonna do a quick roll call. Give me a quick roll call. Shout it out. How's everybody's weekend? Today is Sunday, April the 13th, 2025. We have just began a new week. We're pretty much in like the second week of April, and let's see what we do. We got New Orleans in the building. Shout out, Michael, you from where I'm from. Shout out to New Orleans. We got Richard, Richmond, Virginia. We got LA in the building. We got the Bay Area. We got BR, Baton Rouge, Louisiana. Shout out to the 985, the 225, the 504. Shout out. Shout out to East Coast, Canada. Shout out. Definitely appreciate y'all joining. Shout out to Wisconsin in the building. Shout out to Wisconsin. How's everybody doing? Let's go ahead and I guess we can start off with the news headlines because I don't know how long I got. We're gonna roll with it. Let's go ahead and start off with some news headlines. So over the weekend, I was late to it. Some of y'all probably have seen it already, but we got Brad Garlinghouse. I believe that was on Friday. He went on Fox News or Fox Business, and he pretty much said what he had to say, and we're going to get into it. So let me go ahead and pull that up. One second. So let's see what Brad Garlinghouse had to say. What's up? Let me see who else joined the building. What's up, Ike? Shout out to Jersey in the building. Shout out to you, Donna. Shout out to Canada. So let's go ahead and see what Brad Garlinghouse. Y'all let me know in the comments if y'all seen this.
They are all popping anywhere from 2.5% for Ethereum all the way to 5% for Bitcoin. And XRP up 3.5% here. The pop comes less than 24 hours after President Trump signed into law a bill terminating a rule which would have allowed the Internal Revenue Service to force certain crypto brokers to disclose tax information on their platform's transactions. The original rule would have gone into place starting in 2026. The crypto crowd no doubt enjoying today's pop, but you know what? If you rewind the clock here a bit, they have not recovered the losses endured since the president unveiled his tariff plan last Wednesday. Bitcoin still has about 2% to go here to break even. We've got XRP about 4.97% in the red and Ethereum down 18 1/3%. But is today sort of the reawakening of the march back to the highs crypto saw after the November presidential election, and perhaps a friendlier SEC that may be less litigious with the lawsuits here? Joining us now in a Fox Business exclusive, Ripple CEO Brad Garlinghouse. Ripple's XRP is the native token of the decentralized blockchain XRP ledger. Litigious. For sure. As recently as our conversation with Hester Peirce of the SEC, one of the commissioners, she said that the lawsuit against Ripple was still hovering. Where is it now? Because last night we started to hear that it may be disappearing.
So we have reached agreement with staff, and usually what happens is you reach agreement with staff makes recommendation to the commission, and then the commission votes. So anytime we make announcements about that, we are clear that we've reached agreement with staff. The commission hasn't yet voted, but what we've agreed is to dismiss and move on. We're actually getting, the SEC we had put in escrow a potential fine of $125 million. We're actually taking most of that back, including the interest that had been earned along the way. And I think it's just evidence that the Gensler SEC was on the wrong side of the law. And thanks to the new leadership at the SEC and in the White House, I think we're seeing a much more constructive, much more pro-innovation. We want these industries to grow at home.
When you say most of the $125 million you had parked in that little fund in case of the worst case scenario, what's left? Can you give us some?
The SEC is going to end up with a $50 million. The U.S. government's going to get $50 million. We'd even talked about making that available in XRP. But look, at the end of the day, this is a major step forward. You know, I think if you kind of zoom out and look at this, the Trump administration is absolutely living up to their promises. Guy David Sachs leading the effort at the White House, Scott Bessent, and certainly now Paul Atkins getting confirmed, I think, yesterday.
Yes.
These are people who are focused on how do we make sure this is an industry that can thrive at home with sensible regulation, common sense. And that's not what we had for the last 4 years.
What would you hope to see as common sense regulation? Have you talked to David Sachs, and what have you said? Hey, David, this at least needs to be front and center.
The two things that have the most momentum in Capitol Hill are around a stablecoin legislation and then something we generally call a market structure bill. Stablecoin legislation, because we haven't yet had clarity about at what point are banks involved, not involved, what kind of licensing is appropriate. Ripple recently launched our stablecoin under a New York trust license through the New York Department of Financial Services, which we think is kind of the gold standard for how to be regulated in this market. But having federal legislation that is providing clarity for the big players like USDC, Circle, as well as Tether is super important. I think we're going to see that sooner rather than later.
You know, President Trump has made big strides that are very pro-crypto. It's got to be great for somebody like you. However, the price of, let's just say, Bitcoin, which reached a high after the election of something like $107,000, is nowhere near that now. I think we're around 86,000 and change, but it's been a market drop. When do you foresee this moving back up? Because we've seen all kinds of wild projections of something like $250,000 per Bitcoin by the end of this year, to people who say this thing's going down.
Yeah, when I think about that, you know, your last guest, Larry Fink, talked about just taking the long-term view.
Right.
And I almost...
So after this, I'm going to play the video with Larry Fink. I caught this Friday, well, yesterday, to be honest. So I'm assuming Larry Fink went on right before Brad Garlinghouse. So y'all see that connection right there? What's up, Shy Swag? Appreciate y'all joining. If y'all just joining, make sure y'all hit that like button for me, subscribe to the channel. But yeah, they definitely snuck this in late on Friday or whenever they aired it. I don't keep up with it, but I'm going to play the Larry Fink video after this. But look at the back and forth between Ripple and BlackRock. Look at the back and forth between Ripple and BlackRock. They showing up. Everything is coordinated, in my honest opinion. Everything is coordinated. It's a new week. We're going to reset, prepare our minds, and we're going to get back to this action. Anybody know what's going on with the far as legislation? Anybody know about that? Leave it in the chat for me. And any new news or headlines that have released recently over the weekend, y'all can let me know. Because if y'all don't know, I don't keep up with the news all the time. I mainly follow the markets and the charts, and I rely on y'all to help me out with the news. I need some correspondence. I need some news and fundamental correspondence for my live streams. But let's continue the video.
Almost don't think about it in that kind of short-term time frame. I think about what are the macro trends playing out for the crypto industry, for the XRP ecosystem. XRP has been the best performing major crypto in the last 90 days. We think about it as what does that look like over the next 3 years? I'm very optimistic. I mean, Ripple just announced our largest acquisition, actually one of the largest acquisitions in the entire crypto industry to date. We announced it earlier this week on Tuesday in the middle of tariff palooza. I don't know exactly what's going to happen with the tariffs, but we're betting on where the world's going to be in 3 years, not what's going to happen in the next 6 months.
Would you have made that acquisition a year ago?
No, hard no. Look, the SEC in the United States and even other parts of the Biden administration, it was a coordinated attack across many different agencies. Mm-hmm. We're finding that more and more out now. You already highlighted it in your introduction. The IRS had hostile rules about crypto that really didn't make any sense. Banks weren't even allowed to reasonably custody crypto without having an equal offset to their balance sheet, which really makes no sense for a bank then to even partake in this industry. It's a real industry. People want, I mean, that administration wasn't listening to consumers. They weren't listening to the voter and what the voter wanted. We're now seeing a significant change across the board. And an acquisition like that would have made no sense a year ago, and it makes a lot of sense now.
It is truly amazing. I am looking at you, and I am remembering, was it 2 or 3 years ago? How long has this lawsuit been slapped on you guys?
December 22nd, 2020.
Okay,
so 4.5
years. We've been talking, and I thought to myself, what's going to happen here? And you are.
It's been a very long time. Have y'all ever endured anything? If y'all brand new to investing or brand new to anything, like, have y'all been this patient if y'all been in this market for 3, 4, 5 years? Some people been longer, been in this market for years. But how is that molding y'all mindset for the ones that's been in this space for a long time? How is that building your character? I want to know in the chat. How is that building y'all character? Big Dre, you said you've been in there since 2020. 5 years. So 5 years for Big Dre. No, Carl. How do you pronounce that? Let me see. I'm just gonna call you NorCal Ray. You said 2017. We got 2016. Oh, some of y'all been in this space for a very long time. And you said it's solid as a rock. Okay, shout out to you, Big Dre. 2021, 2018. Shout out to y'all that been in here since 2016, 2017. Y'all, we got some big whales up in here. I'm gonna say y'all are some whales in this market. This court case has been dragging out since 2020, and we got a lot of new people come to the market. A lot of new people. We got 2019, 2018, been a long road. Yes, it has. I'm sure it's building a lot of character for a lot of people. And that's investing. So when these things start to move and take off, you're going to be able to tell people, like, you're going to be experienced. You're going to be, you're going to have a lot of experience as far as investing long term and being able to pass that knowledge down to other people, because y'all are enduring a lot. Some of y'all been investing in stocks, but there's a new generation of people coming in just beginning to invest, and they're starting off in the crypto markets since 2020. So yeah, we got a lot of people that's been investing for a long time. But that court case has been dragging out, and to me, that's by design, that's on purpose. And we're slowly but surely about to come to an end of all this, and things are going to start moving. The tariffs is shaking up the whole economy. The tariffs are, the tariff wars. They're pretty much, it's really a smokescreen for them to start shifting money around. That's what it is, in my honest opinion. What's up, Daryl? Shout out to y'all. Shout out to y'all. Let me continue this video, then we're going to move on.
We're on sort of the edge, the cusp of this just finally disappearing.
For sure. And it's good for Ripple. It's good for XRP, but it's also good for the whole industry. We want these industries not to be pushed offshore. And what was happening in the last 4 years is almost the opposite. We think it's safer to push them to offshore entities.
How many employees do you have?
And people, how ironic that is. The whole narrative has switched. Y'all remember when Ripple was, we're going to move out the United States, pretty much we want to pay American workers, that whole narrative. And at the same time, we got tariffs going on and we're trying to bring manufacturing back to the United States. And at the same time, as we get regulations and laws in place, Ripple is starting to, well, they've been having American employees, but they want to ramp that up. So I find that interesting. That was just my observation.
Let's let people understand how many people you employ.
With our acquisition, we employ about 1,100 people now.
That's incredible.
And these are high-paying jobs. And for a period of
1,100 people. 1,100 people that Ripple employs. 1,100 people. And we're talking about coders and software engineers and stuff like that, high-paying jobs. So if y'all are a software engineer, or I feel like y'all should learn that skill set. That's something to have. You want to go for those high-paying jobs. And if you got children, make sure y'all lead them down that path. You know what I'm saying? Lead them down that path. 1,100 paying jobs, you know what I'm saying, from Ripple. And I think you can go online and find those job openings. And if you learn those skill sets, you can pretty much work remotely. So that's interesting. I know if I was a software engineer, I definitely would be trying to hire on with Ripple.
At time, as you and I have talked about before, for really the 4 years of the Biden administration, we did more hiring outside the United States than here at home. As a U.S. citizen, I grew up in Kansas. I'd like to hire people here. We have some of the best talent in the world here. But it made no sense to invest in a market where we couldn't sign customers. We couldn't actually see banks benefit from a better, simpler cross-border settlement for payments. You know, these are technologies that really can help and revolutionize businesses, consumer experiences, but we have to be able to deliver them to these.
Let this soft mineral melt in your mouth to rebuild your gums and teeth and never need a dentist again. Did you know there are
audiences?
Yeah, I mean, it was more than 10 years ago, I think, we had the Winklevoss brothers getting rejected for their push to have an ETF that allowed people to invest in Bitcoin, and it was a flat-out mic drop no. And now we have so many of those, and this week, an XRP ETF launched, correct?
It hasn't yet traded live in the United States, but it's been, we've had, I think, 11 different applications to go live with an ETF trading here in the United States. We do have it trading outside the United States. This is long overdue, and it's a step towards a more institutionalized, safer way for people to participate in these markets. Our acquisition this week, Hidden Road, we paid $1.25 billion for what's called a prime broker. And this allows.
Have y'all noticed, now if y'all been watching my channel, y'all been following my live stream, y'all know that I covered the XRP futures or the crypto futures. If you notice, they never promote the futures products. They always talk about the ETFs. Do y'all know why? Y'all respond in the comments and let me know your opinion on why don't they talk about the futures products, because the futures products will be way more liquid than the ETFs. The futures products, in my honest opinion, will be way more liquid than the ETFs. And if y'all caught my previous live stream, I showed you that the former chairman of the CFTC said that the futures markets set the price of commodities. The futures markets set the prices of commodities. So you already know XRP is a digital commodity, but the futures markets set the prices of the commodities, but they don't promote that. They lead commercial entities and retail. They lead them into the ETF products. Do y'all know why? Let me read these comments. Like you said, they're more liquid. They only want big money to know about it. Yes. You're absolutely right, Echelon and Excalibur. The futures markets will be way more liquid than the ETFs. But all y'all see these content creators, all they talk about is ETF. Oh, I just seen the H-bar ETF coming. XRP ETF. All these ETFs, which that's cool, but to me, ETFs are for they're more safer financial vehicles where you're looking for a return every year. You know what I'm saying? You're looking for a certain percentage. But institutions want way more risk. They want way more risk and volatility, and that's where they go to the futures markets. And those markets will have way more capital flowing through it So, and I'm a futures trader. I like to stick to the futures markets. I don't really care for ETL products. That's not my type of market. That's not my type of product. I want volatility. I want speed. And when I come to the charts here in a minute, I'm gonna show you what I'm looking for. I always demonstrate this. So if y'all brand new, just continue to watch. I mainly focus on technical analysis, but we're gonna get some headlines that I find important out the way first. Let's go ahead and wrap this up, and then I want to listen to Larry Fink, and then we're gonna go to the charts.
Allows even larger institutions like BlackRock, like the biggest Wall Street financial institutions, to come into this market in a way they understand, with a safer prime broker to help clear transactions and a bigger balance sheet to do that. It's good for the whole industry.
So your last thought when it comes to the trade war, because people had been saying for a while that Bitcoin and crypto were a hedge against all kinds of concern about a falling dollar. I mean, even Larry Fink said on this network, on this show about a year ago, that it was a hedge against cratering currencies of whoever's country. That hasn't quite come into play. The dollar has been falling really precipitously over the past 5-6 days. In fact, it was continuing, at least as of this morning. It hit a 3-year low against the euro and a 10-year low against the Swiss franc. And crypto, at least today, is moving higher, but it moves all over the place. What drives the price of crypto? I
wish I had a clean answer to that question. Like any market, a lot of factors drive that. I mean, there was a period of time as some of the tariff dynamics were playing out where crypto was clearly outperforming the equity markets. But, you know, some people expected it to perform more like gold, where you're seeing all-time highs. I think people are still figuring out how that'll play out. I think the long-term value here is going to be very clear. It is.
Brad Garlinghouse absolutely knows how this is going to play out. That's all I got to say. He knows what's going to play out. He's given us, some people think the market crypto is going to trade like commodities and gold. It also has outperformed the equities markets. He knows what's going. He knows what's going on. He knows what's up. He knows where the potential in these markets will rest. So that's just my opinion. So let me go ahead and get him out the way. That was just pretty much Brad Garlinghouse coming up on Fox Business. I want to say Friday, and I didn't cover it over the weekend, so I just covered it. A lot of y'all probably already seen it already. Let's bring up Larry Fink. How many of y'all seen Larry Fink get up there and talk? A lot of people, you know, when this man comes to stage, you know, I like to get his perspective and, you know, what he's signaling. Most of the time, they kind of like give you breadcrumbs. So Larry Fink, he likes to give you breadcrumbs here and there. And, you know, he kind of like, he doesn't hint too much at what's going on, but he likes to leave breadcrumbs. And that's why I find it important when he pops up. So let's go ahead and play Larry Fink.
With investors suffering from a nasty case of whiplash, let's get right to the floor show. BlackRock Chairman and CEO Larry Fink is here. Larry, I mean, today alone, the major indices have moved up. They've then dropped. They've surged. They've then slumped. I mean, what does somebody like you, the world's largest asset manager, make of these moves, even after a 90-day pause?
Well, the 90-day pause actually makes things more elongated. So we really don't know what the outcome will be in terms of our policies across the world on these tariffs. But for our investors who are mostly retirement, or investing for retirement, our job is to have conversations about helping them move beyond the ups and downs, the chaos, the fear.
That's really hard to do, Larry.
It's really hard to do, Liz, but if you are investing for a 10-year, 20-year, 40-year outcome, you actually, it really doesn't matter what's happening at the moment. And now, obviously, if the market falls another 10%, which is not an unlikely consequence, it may not.
Hold up, you said at the Economic Club it could be dropping another 20%.
I did say that.
Has that changed now?
Nope, not by no means. But I also said at the Economic Club, I'm actually quite constructive over the long run because the mega trends are not changed. The investing in AI and infrastructure, in data centers, these are all going to be mega trends that require huge investments and huge opportunities for our investors. But I want to just get back to this ups and downs and the chaos in the market. I think politicians have to wake up to the notion that
imagine owning one of the most advanced AI, artificial intelligence algorithms, and then coming up on TV and television, and kind of playing a cat and mouse games. Imagine that. This man knows already in advance what's going on, and he's using artificial intelligence. Just imagine that, though. Just imagine that.
Main Street and Wall Street, we've married. 62% of Americans have now invested in the equity markets. 20 years ago, it was less than 20%, and so there was a separation between Main Street and Wall Street. Because of the success of Americans investing in our greatest companies in the world, to enjoy the growth of America, to invest with America, they have been invested in America. So we cannot say that. And so I think we saw today,
What y'all think make this man continue to just wake up every day? And what y'all think? Y'all let me know in the chat. What makes this man just get up and just get at it every day? What y'all think? As far as chasing money, and he's already damn near a trillionaire. He is a trillionaire. He might be a billionaire on paper, but he managing trillions of dollars. He done put his hand in the pot and took out about $1 trillion before. But what makes a person like this continue to wake up every day and have energy to just chase money and not just live life? You said money, Daryl. You said money. That's funny, man. That's funny. But I find these people interesting, like Brad Garlinghouse. Brad Garlinghouse is already a billionaire. Did y'all know that? I'm sure a lot of y'all have, but Brad Garlinghouse is already a billionaire. So at some point, it goes beyond money to me. It goes to like legacy and power. You start playing a different game when you already got billions of dollars. So what y'all think drives these people every day? Legacy, ZZ. You said legacy. Sneaky, you said he worships it. I believe so too. Like, it's not even about the money. I think it goes beyond the money. I think it's about owning, because again, money is just a control mechanism. It's a fiat. I think it goes into like wealth and just owning everything, assets. I don't even think it's the money. I think he gets, he worships assets. Like, I'm going to worship owning as much shit as I can, and you're not even gonna be able to live to see it all. That's crazy. Definitely power. It's about the power and just doing it for the hell of it. That's what I feel like. Some of these billionaires, they wake up and just because, how can I conquer the world? That's another thing. Conquering the world. They got men in this world right now. You only got a limited amount of time to conquer the world in your lifetime. And you got to stay alive. You got to stay healthy. You got a minimum amount of time to conquer the world. And I think that's a lot of stuff that drives these people. You know what I'm saying? Especially when if I'm a billionaire, I'm not going to be online. I'm going to be chilling. I'm going to be chilling, living life and being free. Because if I'm a billionaire, I wouldn't want no more money after hitting billionaire status. Like, why I need 5 billion? Why do I need 20 billion? Why do I need 100 billion? If I got $1 billion, I'm going to do a lot of time spending, giving that money away. I'm just going to be giving that money out to people and still making sure I'm good and making sure my generations are good, because at some point, if you're looking at generational wealth, at some point, a family member is going to destroy the generational wealth. They're going to bring it down. So, man, it ain't no point in having all that money. But I get it. We playing the game. They competing. Like somebody like Larry Fink, he want to be where the Rockefellers are. He want to be where the Rothschilds. He want to be on that level, but you're not going to get to that level. And then I ain't going to talk about the families behind the 13 families. They got more families that go beyond the 13 families, but I ain't going to talk about them. But it's most definitely power, man. Most definitely power. A lot of y'all are saying power. Let's go ahead and finish what he's saying, then we're going to come over to the markets. Let me go ahead and finish this up.
The mood from the Michigan survey.
Consumer sentiment. It's horrible.
It was horrible. Why? Because more and more people have invested in the markets. And to say that Main Street is over here and Wall Street is over here, that's wrong. We've gotten married in many cases, it's a good thing because more and more Americans have enjoyed over the last 10 years this big upsurge in the value of companies in America's dominance and the opportunity to be a part of the growth of America. But when America has a cold, and when there's issues of uncertainty in where we are taking our economy, and we see this pullback and we see this huge volatility, it impacts Main Street.
Even after this morning, when you talk about volatility, so even after what we have seen, and basically you guys reported blowout quarterly profits.
Thank you.
Record assets under management.
Yes.
They reported record blowout quarterly performance. Like, that's because they got Aladdin. If y'all don't know what Aladdin is, go Google BlackRock Aladdin and you will understand what she's talking about. He just like, thank you. Like, he's not even humble about it. He's just like, yeah. Thank you. You know what I'm saying? Like, you should be telling me that. Record. Us regular people can't perform with BlackRock. We can't compete with BlackRock. They got artificial intelligence buying up all the real estate that comes available. So imagine when a home is for sale and then it hits the market, artificial intelligence is seeking that listing and then going ahead and buy it up before you can even discover it. That's what type of games we up against as citizens. That's the type of games we up against. So you're not even quick enough to go find the assets and buy real estate because they're using artificial intelligence to beat you to the punch. And, you know, most people don't have that type of time in the day to like outperform the algorithm. But I'm gonna go ahead and get through Larry Fink. He ain't talking about nothing. He doing the regular Larry Fink, you know, get up on Fox News anytime, you know, he feel like he pretty much calls the phone. He pretty much calls and be like, hey man, I feel like getting up there today, because he really ain't got to do nothing. Make some phone calls. He's probably not even in the business. Like, he's not even managing BlackRock. He's probably he's the CEO, but he just pops in and out, goes on Fox Business and whatnot when he wants attention. He just like anybody else in life. He wants some attention. So there you go, Larry. We gave you some attention. What's up, Jay Manson? Appreciate y'all joining. If y'all just joining, make sure y'all hit that like button, subscribe if you're brand new to the channel. So let's go ahead and come to the let's come over to the economic calendar. One second. All right, on the economic calendar, this is the calendar for the week. We are in the second week. I consider the second week. Some of y'all might consider this the third week of April. But as far as trading goes in the market, this is the second week of April for me. Today is Sunday the 13th, 2025. And this is the economic news that we have coming up for the week. You always want to pay attention to the economic news because these news drivers bring market volatility to the markets. They make the markets volatile at these news releases. So whenever you see red folders, that's high impact news. When you see orange folders, that's medium impact news. And these are just key days, and this repeats every month. So we can anticipate certain times of the week, certain times of the day when the market is going to be volatile. I'm not really focused on Monday and Tuesday of the week. But on Wednesday, we have Jerome Powell pretty much speaking. And after that, I'm going to think the week is going to be smooth. We could see some good volatility this week. So be on the lookout for the volatility in the market. Let me come over here. Let me bring that up. Okay, we got the crypto matrix. We got XRP currently trading at $2.14. We got XLM trading at 24 cents. Have y'all taken advantage this weekend? Let me know in the chat. Did y'all do any purchasing this weekend of these digital assets? Me personally, I've been kind of looking, you know, I like to go to the websites. I like to refresh myself. And like, I'm always stuck between like Stellar and XDC. And I'm like, you know, okay, both of them are good projects. But sometimes I think XLM is a little bit slept on. So I've just been doing a little research on XLM. But XLM currently trading at 24 cents. XDC trading at 7 cents. We got HBAR, which I recently, me personally, taking advantage of HBAR when it was down to like 14 cents. It's currently at 16 cents, HBAR. We got Bitcoin still ranging 84,500. We got Ethereum kind of rebounding but it's at 1,600 right now. We got Algo, 18 cents. We got Solana, $131. So let me go ahead and pull up XRP. So this is what y'all been waiting for, of course. This is the 3-month time frame. 3-month time frame. We currently have 2 months and 17 days left to complete the 3-month candle, which is the second quarter of 2025. Second quarter of 2025. So 2 months, 17 days left. So again, if y'all been following me or if you're brand new, I've been calling out this discount below the market. This discount is a BISI. It stands for buy side imbalance, sell side inefficiency. It's a void or a gap in price that the market makers left behind to offer a discount. And I gave y'all two scenarios. I said, what I prefer to see, okay, if the markets are really bullish, I want to see it drop down here and don't stay down here long at all. Who remembers me saying that? Press 1 in the comments. Shout out to you, Airborne, if you purchase at $1.99. Shout out to you. Who remember me saying, okay, if the market drops down to this gap and it's really bullish, I don't want to see it stay down here long. That's the bullish scenario. The bearish scenario is if this candle, and guess what? This candle ain't done, so don't get it twisted just yet. We're not out the clear. We got to see how the upcoming weeks and days trade. But if this market is really bullish, XRP, I wanted to see it drop down here. It did. Now, the bearish scenario is if we drop down and we stay down here. So this is indicating that they did not want to offer too much of a deep discount. So we open, we drop lower into the fair value gap. We don't stay down there long at all. And we quickly trade above it. Now, right now, the market is bullish. Let's drop down to the monthly time frame. Monthly time frame. So far this month, which is April 2025, we opened the market, we dropped down, took out the previous month's sell side liquidity, which are pending orders below the market. We drop down below the market and take out the pending orders. And in the process of doing so, we drop down into that 3-month fair value gap, which is a discounted buying opportunity. As we drop down, you could have set a limit order at the top of the fair value gap, which is the 1% level at $1.78. If you set a limit order, it triggered it. We didn't go down to the 0.75 level, which is the upper quadrant. We didn't drop down to that. That would have been $1.50. Now, are we out the clear just yet? Well, we're not sure. We need institutional sponsorship. So we got Larry Fink going on Fox Business. We got Brad Garlinghouse going on Fox Business. What else is potentially bullish? Well, there's a lot of bullish news in the space or out there in the universe. But what are some things? What is a catalyst that can push these markets higher? I'm gonna go ahead and say the tariff. I think a lot of people think the tariffs are like a negative impact on the economy. Yes, it's sending shock to the markets, but how quick can these markets rebound? That's the question. What I'm about to say. Yes, the markets have been very volatile the past couple weeks, but do y'all see in the fourth quarter that these markets could potentially rebound because of the tariffs? Y'all let me know in the comments. ZZ, what do you say? Boss, it will be returning to that fair value gap. It's going to spike due to these pauses as a fake out. And then it's going down back to the $1.50, $1.78 for institutions to buy. No way they buying at $2.25 or higher. ZZ, let me tell you this. And I agree with you. I'm going to say that's a possibility. I always say that's a possibility because, again, I don't control the markets. All I do is get in sync with it. So I gave y'all two options. There's still that discount. Yes, they can drive it back down there. Also, institutions got so much capital that it don't take much for them to scoop up anything. That's how much capital they working with. Like, you know how much purchasing they could have did down at these levels down here? And it's like in the billions of dollars. So that's another thing. Every time they drop it down, now they can scoop these assets up very quickly. It doesn't take much for an institution. And it's different scenarios. Right now, we're just consolidating. The month of April, we started off bearish. Remember that. We started off bearish, all that tariff news, all the bad stuff going on, whatever, etc. I don't care about none of that. We sell off, we drop down to discount. They offered it to you, and we didn't stay down there long. Now, if the market is going to be really bullish, we need sponsorship. We need speed. We need institutional sponsorship. We got a lot of liquidity above the market. You said China getting their stuff together. We definitely in a trade war. There's many narratives going on right now with the tariffs. Many narratives. People are pro-China. There's people that are pro-America, and both sides are doing what they got to do. I'm gonna say let it pass as long as there's not no hot physical war. ZZ, you say they are beyond greedy, which I know. They want it for the best price possible. $1.50 below would be the trigger for them. ZZ, what if I told you that they've been in these markets before $1.50? What if I told you that? Do you think the institutions are just coming to the market? And ZZ, you remember, I don't forget. I got a photographic memory. I do remember you saying you don't want to see it. You couldn't believe that they would drop it below $2. I'm not coming at you, ZZ. I just remember you could not believe that they would drop these markets below $2. And I was telling y'all ahead of time, a month ahead of time, that it could happen. And they sure enough, it did. Now I'm telling you, there's a possibility, yes, we can come back down in here. Let's see how we close the month of April. April is the first month of the second quarter. So we got 16 trading days. 16 trading days left to complete this candle. That's about 2 weeks. So we got about 2 weeks until we close this candle. Let's see how we close the month of April. And then we will go into May, which will be the second month of the second quarter. So let's see how we trade. ZZ, I see it going to 250, 275, and then dropping back below $2. Granted, everything come out of the White House can change things temporarily. Okay, ZZ, I respect your analysis. I respect your analysis. Airborne, you said not going below 208. Airborne is only at 213. It's definitely a possibility. But once I start going out to these lower time frames, y'all will see here in a minute. Once I drop down the lower time frames, I will get a better read on price, what we're doing in price. What's up to New Zealand in the building? Shout out to New Zealand. Now, from the monthly time frame, again, we got 16 trading days on the monthly. Let's go down to the weekly. Now we're going down weekly. So here we are. I'm going to go and ask the golden question. I ask this every week, every day. Look at the current candle. This is the current candle for the current week, for the upcoming week, this week. We have 7 trading days to complete this one candle. Now I'm going to go ahead and ask the community, ask the chat. Everybody participate. I got 39 people in the building. Make sure y'all hit the like button. Subscribe to the channel if you're brand new. I need everybody's participation. And it don't require much. Y'all press 1 or press 2. Press 1 or press 2. This candle right here, do y'all see it coming up, taking out the previous week's high? Press 1. If y'all see it coming down to take out the previous week's low, press 2. And y'all should know why that's significant, because above old highs and below old lows, that's where the pending orders in the market are. So there goes the golden question. Press 1 if we're going to go higher. Press 2 if we're going to go lower, take out the previous week's low. Y'all let me know in the comments. We got a lot of ones in the building. A lot of ones. I need everybody's participation. I think they will take it to 95 cents to shock the small investors out. Sneaky 1. XOR is up and down. What is XOR? We damn near got a unanimous 1. So for y'all people that are bearish, and these are the people that pretty much, a lot of y'all are in my Patreon. If y'all haven't signed up to the Patreon, sign up if y'all want to learn this skill set. And for the people that's in the Patreon or just signed up as well, make sure y'all read the instructions on my Patreon page on how to link your Patreon to the Discord. Link your Patreon to the Discord, because I don't see a lot of y'all in there. Y'all are purchasing the product, but I haven't seen y'all in there. Make sure y'all are linking your Patreon to the Discord so you can get access to the content. And message me if you don't understand. I'm trying to I'm trying to help y'all out and give y'all value for what y'all pay for. But a lot of y'all are picking one. A lot of y'all are saying higher. Y'all should understand, for the people that are in the chat, y'all should understand why y'all are picking the market to go higher. Is it because we dropped down to the discount, which is the 3-month fair value gap? We dropped down the discount. Remember, the markets only go from a discount to premium to discount. Let me lay it out for y'all who are brand new. The markets are algorithmic. Those are the concepts that I trade with. If you're new to my channel, the markets are algorithmic. They are algorithms do generic things. They do repeating functions. Do y'all understand that? Algorithms do repeating functions. So I'm gonna list a few functions. All the market does, or the algorithm that books price, it's the algorithm that books price. It either consolidates, it expands, it retraces, it reverses. It either seeks liquidity or inefficiency in the market. And it goes from a discount market to a premium market. That's all the market does. So do y'all understand the generics of the algorithm? So let me read this comment. Boss, do you agree that since no large candles when it was $1.63, $1.78 indicates no bullish movement incoming? Not necessarily, ZZ. Not necessarily. That those large candles would have been an indication of institutional sponsorship, meaning capital coming in. When I talk about capital, I'm talking about institutional capital coming into the market and moving higher. Right now, we're just consolidating. They're allowing sentiment to build. Again, every time it drops down to discount, I'm gonna accumulate, and at the discount comes premium. Discount to premium, premium to discount. If I go out to the 3-month time frame, let me ask y'all this. For the ones in the back, what market profile are we currently in? Again, are we consolidating? Are we expanding? Are we retracing? Are we reversing? What market profile are we currently in on the higher time frame? Remember, the higher time frame drives price. It has more influence over price. So when we zoom out and look at price action or order flow, what market profile are we currently in? Shout out to Daryl. Daryl was always the first one in the classroom. One of the first ones. Shout out to Lawrence, all of y'all. Expansion. So we're in an expansion profile. Daryl, you say, I feel like they're going to play around with everyone, which they have been doing, Daryl. Take it up higher, get some hopes up, draw in some FOMO buyers. Then the week after, bring it back down to the fair value gap. Because some sell-offs. So, Lawrence, we are not in the consolidation. Well, no, we're not in consolidation. No. Ed, we're not in the consolidation. We left that consolidation. We stayed in the consolidation for years. Now we left that consolidation. Some of y'all need some refreshers, and that's okay. That's why I'm here. Some of y'all need that refresher. So what y'all are looking at, let me highlight what y'all looking at. Let me highlight what y'all are looking at. Daryl is the only one that got it correct. Y'all are looking at this right here. Y'all see that? Y'all are looking at that sideways consolidation that I have highlighted in pink. Or your eyes might be looking at all this right here. You see all that sideways price action? That was a long-term extended consolidation in the market where we just traded sideways. Well, guess what? We're no longer consolidating. We're in an expansion profile. Expansion. The market is moving. It's expanding higher. We are in a buy program. So whenever we leave a consolidation, we look for expansion. Consolidation, expansion, retracement, reversal. Drill it in your head. Now we're in an expansion profile. So our whole concept, our whole strategy changes once we leave a consolidation to an expansion. When we're in an expansion profile, we look for fair value gaps. Fair value gaps are easy to spot when the market is moving in an expansion program. In an expansion program. What's up, Lenny? Appreciate you joining. Shout out to you. I'm glad you can tune in at this moment. Daryl, 3 to 4 digits end of year. Oh, you very bullish, Daryl. You did very bullish. So you saying? Oh, wait, Daryl. Oh, you are trolling, Daryl. You trolling. I got you. Damn, I hope so, Daryl. Hey, get the hope out. Get that hope out of here. Cause regardless, like, okay, let's say this, and shout out to you, Daryl, for trolling. Are y'all going to be complaining, for y'all that been in XRP, and a lot of y'all told me since 2020, since 2018, since 2017, y'all going to be complaining if XRP goes to $50 by December instead of 3 to 4 digits? Are y'all going to be complaining? Are y'all going to be complaining? And it's definitely possible. But look at what I'm looking at right now. You see how we dropped down into this fair value gap? And I told y'all, I gave y'all the scenarios last month. If we drop down into this gap and we don't stay down here, that's a bullish indication. Remember I said that? That's showing strength. We drop down into this fair value gap and we start moving away from it. As long as we can start moving away from this gap, we start moving, pushing higher, that is going to be very, very bullish. Very, very bullish. I know y'all would complain. You said, hell no, I would not complain. ZZ, you said we'll be lucky for $100, yet 20 is reasonable, or $8 worst case. That's more realistic, ZZ. I can kind of agree with that. And $100 would be, the price action will be probably looking better than gold. I would say that. Airborne, $5 by the end of the year. That's better than where I think we might go a little bit higher than $5 because we're already at we ranging at 218, and the old all-time high is at 339, which we formed that back in January this year. We was at 339 in January. We definitely get back up there sooner than later. Last thing I'll be doing is complaining. Shout out y'all, most definitely. If y'all just joining, make sure y'all hit that like button for me. Subscribe to the channel. I'm trying to get over 1,000, man. YouTube, and I've seen other content creators saying like, you know, this information, you know, this is some powerful information. I'm not just out here clickbaiting and none of that. I'm actually giving y'all real technical analysis, and y'all have witnessed it. So I think that type of information, it has to be suppressed. You know, we can't really push that out. Too many people can't learn about this. What's up, Wilson? Never seen you before, I don't think. Need laws, point blank. Most definitely, I agree with that, Wilson. But at the same time, no, not really. I'm not discrediting what you're saying. Yes, regulations and laws must pass. But that ain't stopping institutions from going in these markets, buying it up and pushing it higher. That's not stopping these institutions. A lot of people said, oh, we need laws to pass for XRP to get $2, $3. People were saying that then. Back when the market was sideways consolidating, back then for years, when it was nowhere near $3. All these years, this goes all the way back to 2018. See this consolidation, the sideways price action, 2018 all the way to 2024. So during that time period, people didn't see it going up to $2, $3. And we didn't come close to that. Maybe in April 2021, it went up to $1.96, but it didn't go up to $3. And a lot of people didn't see it coming back up to the all-time high, which was in 2018, it was 331 right here. A lot of people didn't see it coming back up here until regulations, laws, court case over. And we did all that before the court case was over. We did all that before laws were passed. So don't discredit these institutions. They're going to get their way first. The banks, the central banks, y'all should know this, which a lot of people still don't understand this. The central banks control politicians. Y'all don't understand that? These banks, central banks, control people in positions of power within government. Y'all should know this stuff. So they do things when they want shit to be moved around, they're going to get their way every time. So if they want to push price higher before regulations, well, guess what? That's going to be all organized, all coordinated, because once it goes higher and then they release the regulations and make everything law, this shit is going to be out of reach for a lot of retail. They're not going to be able to obtain this. And if you're new to my channel, I went over this. I showed y'all the futures contracts and how expensive the contracts are. Retail is not going to be able to afford those digital assets that y'all have stored away on your cold wallets. They're not going to be able to touch these assets at all, period. So shout out to y'all that are in it, and don't discredit what these institutional power, what kind of powers they have. They can drive these markets. They're the only ones that can drive these markets. But again, we're looking at right now. I'm looking at the market from a long-term macro perspective. We're not even looking intraday. I'm not looking intraday right now. It is about to be 10 o'clock Eastern Standard Time, 10 o'clock p.m. Eastern Standard Time. We're currently in the Asia session. The Asia session goes from 8 p.m. to 12 o'clock midnight, and I'm not really interested in that right now because we are on. It's a Sunday. There's not nothing going on a Sunday, as y'all can see. Market is just consolidating. I already know what the market is going to do based on price action. From the 3-month, let's go back down to the weekly. And then, all right, you already told me. Again, I show y'all this every week, and 9 times out of 10, it always plays out. Y'all told me y'all want to see the previous week's high taken out right there. Boom. That's the previous week's high. So that's the draw on liquidity. Listen to the terms that I'm saying. That's the draw on liquidity. Price is going to want to draw up to that and seek the liquidity above the market. So from the weekly, we know we got 7 trading days left. Now let's drop down to the daily. And on the daily time frame, y'all just going to see consolidation. And that's what it looks like on the daily. That's the weekly target right there. What I need to do now is I need to go intraday. Let me go ahead and set up my chart intraday. Go ahead and set up my chart intraday. So I'm gonna drop down anything below the daily time frame, and this is where y'all take notes. Again, I'm still giving out free game, even though I'm just started the Patreon, and if y'all want to sign up, go sign up for it. But I'm still on here adding on top of what I've already talked about. But we're gonna drop down to below the daily. Everything below the daily, the perspective that I have, the way that I view the market is intraday price action, intra-week, intraday. So as you can see already on Sunday we came up and took out this high right here, or did we? Yeah, we took out that high. Oh wow, we already took out that high. We took out the high from 2 weeks ago, and also we took out last week's high. So we already drew up to that liquidity. Do y'all think it's random? Do y'all think it's random that the market trades up to this high right here? Y'all see that high? That high right there is the high from 2 weeks ago. See this high? This was the high from 2 weeks ago. We skip a week, and then early on Sunday, we go up. Look at the bodies of the candles. Do y'all think that's random, or is that algorithmic? Y'all let me know in the comments. Look at the bodies of the candles. Look at you can't make this up. Is it random that the price action or the markets go directly to that level, offload their long positions, and then they short the market back down to that discount on the daily? And let me go back out to the daily to show y'all that daily fair value gap. Definitely not random. Definitely not random. So right here, y'all see this BISI right here? This is an inversion gap. So this was a SIBI, not a BISI, my bad. It was a SIBI, and we traded through it, and it became an inversion gap. So again, we got BISIs, we got SIBIs, and we got inversions. So we traded through it, and we traded back down to it after taking out buy side right here. Traded up, take out buy side liquidity, and we traded back down inside of this inversion, using it as a support level. Now let's see. Above the market, we got this gap is right here. Above the market, we got this SIBI right here. Right here. So look on the daily time frame. You see this SIBI, sell side imbalance, buy side inefficiency. We trade up into that. Do y'all think that's random that we take out the liquidity right here from 2 weeks ago and we trade up into this higher time frame daily fair value gap? Do y'all think that's random that the market trades into that and rejects it and come back down to discount? There's a possibility we can consolidate the rest of this week. Let's see what we want to do. Now let's drop back down to the hourly, and that's that perspective on the hourly time frame. We trade up, premium, trade back down to discount. That's what I mean by the market only goes from premium to discount, discount to premium. Take out the buy side liquidity, pending orders. And once these futures contracts go out, This sell-off right here was an opportunity to short the market back down to discount. But again, I'm going to reserve that for the Patreon. I'm not going to cover that today. If y'all missed me live stream, what that was? What day was that? Thursday? No, Friday. On Friday, I did a live stream of live trading. So if y'all missed that, I feel like y'all missed good information. I appreciate it, Airborne. I appreciate it. I try to be authentic. You know what I'm saying? I feel like the authentic creators, which I'm not no content creator. I'm a trader first. I like to do this for a hobby. This gives me something to do. And there's always things for people to learn. I feel like me teaching people, that's just something I like to do. I like to help other people out and teach them. So I don't consider myself, even though this is content, I don't consider myself no full-time content creator where, I could trade the markets. I already got the skill set to go in the markets and trade. So I don't really have to rely on content creation. But I enjoy it. This is actually fun for me. Like, this is a hobby. So I kind of enjoy it. And I got a lot of good feedback. Everybody that subscribed to my channel shows a lot of positive energy. So I'm going to keep doing it if people keep showing me positive energy. And I definitely appreciate it. So what I'm doing right now is I'm setting up my charts for the upcoming week for XRP. And then here in a minute, I'm going to look at the other assets. But I'm not going to do this type of analysis, what I'm doing right now on the other assets. I'm just going to give y'all the macro long term. And I'm not going to be too late because I already had my live stream mess up twice. And we're rolling good so far. So hopefully we can get out of here without any hiccups. What I'm doing is I'm setting up my charts for the upcoming week. This is freehanding the markets. I'm not using any indicators. I'm not using, I'm just using time and price. And I'm using these certain concepts. Airborne, you say you bought into the XRP ETF. Tell me about it, Airborne. What about it? How much was it going for? Let me read some of these questions. Sneaky said, "Boss, I got a question. Got a buddy of mine thinking of liquidating his entire bag at." Oh my God, here we go, y'all. Here we go. Sneaky, you should not be at. You've been here, Sneaky. So let's read this question, and y'all should already know the answer, because people don't know what the hell they doing, and they just thinking about shit, and they not thinking rational. They have no strategy. I would tell you to get him to sign up to my Patreon so he can learn how to do this shit. But let's go ahead and read this comment. Got a buddy of mine thinking about liquidating his entire bag at $275 to buy back lower. What is your opinion? Just various or curious. I'm assuming you're saying curious. My opinion is that would be stupid as hell. And we're talking about, when am I going to drive it home for some of y'all? I'm not coming at you, Sneaky. When am I going to drive it home for some of y'all? Because a lot of y'all watch me, and I'm not, this ain't pertaining to you, Sneaky. Y'all watch me, but every time I try to, this is what I got to do every time. I got to do this. I'm going to start just having this ready on my live stream. I'm going to have this ready. Investing versus trading. Sneaky, let me ask you this question. You saying I'm telling him not to, but he keeps bringing it up. He watches and hoping he listens to you since he's not listening to me. Well, I don't know him, Sneaky. That's your homeboy. That's your homeboy. So he should be able to listen to you. He ain't gonna listen to me. So what I like to do is, for the people in the back of the classroom that watches and don't pay attention, I do this all the time, and then I get these questions all the time where people are trying to trade their commodity, the token. You do not trade the token. You invest in the tokens. You invest in the tokens. You trade futures. You trade futures where you want those quick gains and shit like that. Don't be trying to buy. If you don't know what you're doing, that's why I teach the Patreon group. If you don't know what you're doing, why the hell are you going to be trying to liquidate your assets and try to get it at a deeper price? You think it's going to go one place and it never goes up to your price that you think it is. And then you're going to fuck around. The market is going to continue to go into a buy program, and you're going to fuck around and sell at $275 and not going to be able to get back in because y'all don't know what the hell going on. That's why you need to learn this skill set. Sign up to the Patreon. But this is where we got to clear the room. Again, We got investing versus trading. And I'm gonna let y'all read it. I'm not gonna go through all this. But one thing I want to talk about is investors. So your buddy, he's an investor clearly, but he's trying to apply trading strategies. What he's trying to do is he really want to grow his money and grow his, he's a long-term view, but here he is trying to play short-term games. Traders, which I know people that trade only, they don't, listen, I know people who don't have no investments. They might have like real estate and shit like that, but like as far as stocks, I know individuals, the person I learned this from don't own any stocks. There's no point in earning stocks when he can go make $100,000 in a week. There's no point in owning stocks if you can go make 40% a week, per week, 120% per month. There's no point in owning things when you could just be strapped with cash and, you know, buying other things like gold and real estate instead of owning stocks. So what y'all trying to do is y'all trying to buy these assets, these digital tokens, and y'all are always trying to trade with them. When I keep preaching to y'all, y'all can do that strategy where you're buying and selling, because you're gonna wait. You can, instead of selling at 275, you can be looking for opportunities to short the market back down to discount. So you could be earning profits in the opposite direction. But all people got it. Only thing people have is a buyer's mentality, a buy and hold mentality. When smart money, institutional money, they are buying and selling in both directions in the futures markets, trading futures products. And that's why I'm trying to get y'all to understand. Those are different markets for those strategies, not investing in the asset. So our central banks, are they accumulate physical gold and then trying to sell it on the market and then trying to buy it back? Y'all let me know in the comments. Are central banks, are they trying to buy gold bars, sell it on the market, and then try to buy it back at a discount? Are they doing that? Y'all let me know. Is that a smart strategy? Y'all let me know in the comments. Does that make sense? SBG, shout out to you. You say no. Lawrence, no. Daryl, nah. So does that make sense? Buying gold, buying silver at a discount and then letting it go up to a premium and then try to sell it and then try to buy back in on the physical metal. Y'all need to start treating y'all digital assets like it's a physical. I think because it's not physical, that y'all kind of look at it as something that's paper-based. No, your commodity, your assets that you're buying, those are digital pieces of software. There is some type of node somewhere, some type of algorithm, some type of computer somewhere that operates the XRPL. So you're pretty much essentially, I'm gonna just use XRP for example. When you purchase XRP, the token, you are pretty much buying pieces of the hard. It's software. But that software, the hardware can't do nothing without the software. That's what I'm trying to say. So you're essentially owning pieces of the software, and the hardware can't operate without the software. And this is just a new era of investing, a new era of money. So a lot of people still don't grasp that concept. A lot of people still don't get it, that you own digital software. Does that make sense? So why would you be trying to treat it like gold? That's what I'm trying to say. Treat XRP or some of these digital assets like gold. People are not buying and selling gold trying to get back in at a lower price. No, they're buying it because it's only going to go higher in value, like gold has been doing. XRP and some of these digital assets are commodities. They're not going to fall under securities. They're going to fall under the same category as gold, silver, and other commodities that have use case and utility. So hopefully y'all understand that. But I hate to be long with it, but let's come back to the market. And again, we just kicking it today, y'all. I'm not really going in depth like I normally would. Okay, let's come back down. This is the XRP on the 1 hour time frame. We're intraday, and I was just setting up my charts. Right now, we're just trading back down to discount. I want to look at the previous day's lows. That's where sell side liquidity is. So I take these trend lines. I look for previous day's lows. Make sure y'all hit that like button for me. Subscribe if y'all brand new to the channel. Click the link for the Patreon if y'all want to learn how to apply these same tools that I'm using and understand how to read price. So on the hourly time frame, I'm gonna ask y'all, even though I halfway already did it, I'm gonna ask y'all on the in the chat, what's the first thing I do once I drop down intraday? This is a refresher for y'all who don't remember or you forgot. I know somebody, at least one person remembers the first thing that we do once we drop down intraday, which is we're going intraday looking at fractal price. So if you look at that weekly candle, we're zooming inside of that weekly candle. You can't see what's inside of that weekly candle on the weekly time frame. But when you drop down the lower time frames, you can get a better view and a better perspective of what's going on intraday. And that can help us, aid us in direction of price on a higher time frame by dropping down to the lower time frame. Shout out to you, Daryl. You highlight the previous week's highs and lows. So again, already early on Sunday, we came up, took out last week's high right here. We just highlight that right quick. That was last week's high. I came to the markets kind of late this evening, but we already rallied up, took out last week's high right there. And we took out the high from 2 weeks ago. Boom, right there. So we already got some volatility here early in the week. Trading up, taking out buy side liquidity. Above those highs are pending orders. A lot of y'all are correct. Okay, let me show y'all a quick trade example as well. So we come up, take out the previous week's high. I ain't worried about the price of XRP right now. It's currently trading at 215. So for your buddy, who asked me that? Who asked me? Sneaky, you had asked me that. So what your buddy should be doing is, here we are Sunday, early Sunday, 5 a.m. during London session. We trade up, take out buy side liquidity. So from the 1 hour time frame, let's drop down to the 5 minute. Now we're intraday. On the hourly time frame, we drop down to the 5 minute. You can see us trade up there. I'm more focused on, after we take out the liquidity, we draw up into that SIBI right here on the daily. Look how price is bouncing off of it, using it as resistance. That's what we call a premium. Because we traded up into a premium, we're using that premium level as a resistance. Finally, the market breaks down. It starts to break down. Let me show you how many entries that you can find. What is this right here? Look at this SIBI right here. That's one entry. If you wanted to short the market, one entry. That's a sell side imbalance, buy side inefficiency. Look how the market trades up into that. You can get it. You can use it to short the market. Set your limit order at the midway point or the low of the fair value gap. Market displaces lower. Takes out this sell side liquidity right here. Order flow has shifted. That's the shifted market structure for y'all who ask me, what does the market structure look like when it shifts? When we go up to a premium and start breaking down, taking out previous lows. Intraday. After taking out this low, that's a shift in market structure. Then the price action rallies back up. These are all algorithmic concepts. We trade back up into this right here. What is this? What is that right there? It's not random that the price action goes directly there. If y'all watch me do this live, these are the same things that I'm using. Same exact things that I'm using. Yeah, Lenny, I know that was you. I know that was you. And there's a few other people that always ask me that. We trade up into this level right here. That's another entry. If you missed this entry up here, which was more risky, there's a low risk one right here. Also, market is in a low resistance liquidity run. So it's not chopping around. What is high resistance? These are the key things that y'all should be taking notes of. Look, this is high resistance right here. Can y'all see it? Can y'all visually see high resistance? You see this consolidation right here? All this back and forth, sideways price action, a lot of wicks, high resistance, choppiness. Whatever y'all think is chop, that's high resistance. And then from high resistance, price goes into a low resistance liquidity run where it cleans up and it runs smoothly. It's not a lot of deep retracements, not a lot of choppiness, not a lot of deep wicks. It runs smoothly in a hurry trying to get to where it needs to go, which was that buy side liquidity. After taking out that buy side liquidity, you wait. You wait, and then the market kind of chops around. It becomes indecisive, as if it wants to go higher or wants to break down. You want to wait. And in that process of waiting, the market starts to break down. Displacement low, we're taking out this low right here. Once we take out that low right there, that's a shift in market structure. So I'm gonna ask y'all in the comments, for the ones that been listening, if you're brand new, you probably never heard this before, especially if you're new to my channel. For the ones that's been here, what is this right here? What am I highlighting? This is an expansion profile, but what kind of run is it? What kind of run is that? Over here to the left, we went from a discount up to a premium, and we run higher. This is a 5-minute time frame. There y'all go. If y'all brand new, look at the people in the comments. They're letting you know what kind of profile this is. I teach these in the Patreon. This is a buy program. Remember, the buy program was going up to a premium. This is what I mean by premium to discount, discount to premium. So let's highlight it. Premium. We trade up into a premium. See the candle? You see the candlesticks go up to a premium? Okay. We look to short the market at a premium, which is this high time frame daily fair value gap and the liquidity draw. Take out the liquidity, trade back up into the premium, and then the market starts breaking down. Once we break this low right here, that's a shift in market structure. And once the market structure shifts, we go into a what? What do we go into after that? Y'all let me know in the comments. Let me know in the comments. We go from a buy program to a what? Sell program. Shout out to y'all. If y'all brand new, y'all might not understand this right now. This is more technical. So we go from a buy program to the premium. We leave the premium, go into a sell program to the what? Discount. There you go. Premium to discount. Discount. Now where y'all think the market is going to go after leaving discount? And y'all know, you already told me that on that weekly time frame, y'all see the market going higher. So y'all see the market expanding higher, taking out at least at minimum the previous week's high. That's a target. So premium, market maker buy model. We short at premiums, market maker sell model going lower down to discount. There y'all go. I'm gonna say the rest for the Patreon. So again, if y'all understand it, if you don't understand it, go back and watch. It's not random that the markets are doing this, repeating over and over again, being generic. And after we trade up to this SIBI right here, we trade lower. There's another SIBI right here. Let me highlight it. This is a larger one, but it's a good thing. Let's give some context to this one right here. And this is kind of what we're seeing on that 3-month time frame. On that 3-month time frame, that fair value gap on the 3-month time frame. This is what I want to see if XRP, in this case, this is bearish, and I'm looking to short the market right here. But if on that 3-month time frame for XRP, this is what I want to see. I want to see us, boom, trade up into it. We could trade up into it for a few months, few times, but we're staying below the midway point. Y'all tell me in the comments, this is a SIBI, a fair value gap. Anything below the midway point is what? Anything below the midway point of this fair value gap is what? Y'all let me know in the chat. Anything below the midway point of this fair value gap is a what? There y'all go. So is it random that y'all know, okay, is it random? Y'all said discount. So y'all know we can see that the market has shifted and now we're in a sell program. And as we trade up into this SIBI, we're not, because we know we want because the market's algorithmic and it wants to go lower, it has no reason to come back up to the midway point or even the premium side of the fair value gap. Y'all get that? Do y'all understand that? It's showing heaviness and we have no real reason to come back up to the midway point or above that, which is the premium of the fair value gap. So we hang around for a few candles and then we displace lower. And then, okay, the market starts to retrace. If I drag this fair value gap right here, guess what it does? Do you think it's random that price action comes right back to it? And I'm sure there's some type of higher time frame. I'm on the 5 minute. There's some type of higher time frame gap in here somewhere. But it's not random on the 5 minute that we trade back up into it. Give you 1, 2, 3 opportunities to get in. And then the market continues the sell program down to discount. Here goes another SIBI. You see the SIBI right here? I'm going to highlight it. So is it random that price action after leaving this SIBI displaces lower and it trades back up into this one? Look at the bottom. Again, it's showing very heaviness intraday. So we trade back up into that fair value gap. So a lot of y'all probably think, oh, it's been quiet today and the market really isn't moving much. Man, the market is moving a whole lot today on Sunday. It's doing a whole lot if you know what you're looking at. A lot of y'all might not know what y'all looking at because y'all got these long-term strategies, these long-term ideas, and a lot of y'all might not know how to read price action. But I'm a day trader, and here I am just trying to show y'all what's really going on. But a lot of y'all don't see what's going on intraday like this. So there goes another shorting opportunity right there. And then guess what? Market drops directly down to that discount level. And if that was a trade, you would be in and out the market. You will be in and out the market. And remember, on those XRP futures that are coming to Coinbase, every tick, which is over here on the right side of my screen, where it says price, we're showing the price, every tick is $1. That shit is very expensive. So 2.1425, if this goes to 2. So there goes like shit, it's moving higher right now. So that damn near was like $10 right quick. So this is going to be very expensive. And to move the digit to the left of the decimal, that's like $10,000. Have y'all put that in perspective just yet? If we're trading the XRP futures. And remember, okay, yeah, the 21st coming up. The 21st is coming up. So definitely, you know, we're getting closer to those XRP futures on Coinbase. And then now we're looking at current price action. We're just dropped down a discount. And now we're starting to show movement and signs of wanting to go higher. So that was just a quick, brief, little in-depth analysis. And that pretty much was XRP today on Sunday. So hopefully y'all understood that. If y'all missed anything, go back and watch the live stream and get some better feedback on what I'm explaining. Or if you want more details and more in-depth, sign up to the Patreon. The link is in the description. Let me go ahead and lock in right quick. Let me see what's going on with price, because it's definitely being very volatile. And again, I expect more volatility this week because there's not a lot of news, but there's some high impact news sprinkled in. But what I want to do is I want to look at the current session. We are in Asia, 8 o'clock p.m., 12 o'clock midnight. So let me do this right quick, get a vertical trend line. And I'm going to drop it on 8 o'clock p.m. right here. Boom, 8 o'clock p.m. Give it another color. Give it that white color. And I'm going to clone it, take it out to midnight. So in between this window right here, in between these two vertical lines, this is the Asia session from 8 p.m. to 12 o'clock p.m. And after leaving discount, let's see what we want to do. Go out to the 15 minute. Matter of fact, I need to go out to the daily right quick. Let's go out to the daily. I asked y'all what y'all see the market doing on the daily. Let me hide some of this. So on the daily time frame, I already asked y'all on the weekly, I meant. But on the daily time frame, do y'all see the market going higher, taking out the previous day's high? Or do y'all see it coming down, taking out the previous day's low? Or do y'all see it consolidating, having an inside range day? What do y'all see? Let me know in the comments. What I'm looking at right now is I see an order block, a bullish order block, and we got this BISI inside of that inversion gap. So if we decide to come back down lower, there goes that inversion gap right there that I'm highlighting. I'm gonna give it another color. Lawrence, you say you think we're gonna consolidate? We'll see, man. We got some momentum right now. We got some momentum going on right now. And then I always say in crypto, expect the unexpected as far as fundamental news. Expect the unexpected when it comes to fundamentals. Just like Larry Fink and Brad Garlinghouse going up there You never know. Every week, every other week, every month is something new that comes out, and it could be a news driver to the markets. You never know what's going on. So definitely be on the lookout for headlines. But right now, my bias, I'm gonna go ahead and give y'all my bias so far. So if I just drop back out to the 3 month, and I'm 50-50 right now. I'm not too confident if we hold strong, but it's looking good. I'm not even gonna lie. It's looking good right now. If I go back out to the 3 month time frame and just look at that candle, that is showing strength. This is exactly the scenario I wanted to see. Like, I didn't want to see us trade down here and hold price down here inside of this gap for the next 3 months, potentially the next 6 months. I didn't want to see that. So right now, my sentiment is strong. I'm showing bullishness. So I'm going to try to get in sync. Right now, I want to be bullish. That's my bias. So where does that start at? Well, I start on the weekly time frame. Let's go down to the weekly. And this is, I showed y'all earlier, on the weekly time frame, that's where I start and begin my weekly bias. What direction does price want to seek for? You always want to start with a bias, and it's very simple. It's very generic. We start at the weekly time frame. If we're not too for sure on the monthly, the 3 month, we need to get a little bit closer to price, and we want to analyze, okay, the weekly time frame. And you can start right there and say, okay, all I need to focus is on this week. What do I see the price action doing this week? And it is simple. You pick a side. It's almost like flipping a coin. You pick a side of what side of the market do you want to see price reach for. And this week, a lot of y'all agree with me. I want to see us come up, take out the previous week's high. And you already can see here on Sunday, going into Monday, price is already showing signs of wanting to come higher. So it's going down to the daily. On the daily time frame, y'all told me, what side of the market do y'all see price reaching for? This is daily bias. So I give y'all the weekly bias. Here's the daily bias. Do we see us coming up, taking out the previous day's low? Do we come up taking out previous day's high? Or do we just trade inside of a range? Well, I'm going to pick the side of taking out the previous day's high, which is the previous week's high. So that's my bias. That's my bias. I'm bullish for the week. If y'all don't understand, for this week, I am bullish. And I expect the market to kind of move higher for XRP. And then from the daily, everything below the daily time frame, we're going to look at the market intraday, go down to the 1 hour. Now we're intra week on the 1 hour. And you already can see dropping down the discount, starting to move up to premium. Discount starting to reach for a premium. And I want to see us come up and take out this high right here. We got some good volatility going on right now in Asia. So let's go down to the 15 minute time frame. We are in the 10 o'clock hour. So let me do this right quick. I'm going to clone this candle. I'm going to drop it on the 10 o'clock hour. So from 10 o'clock to 11 o'clock. Right there. Now, next thing I'm going to do is we got previous session highs. So we got buy side liquidity that they left behind in the market over here. I'm going to remove this for now. But these highs that they left behind, this is a draw on liquidity right here. This is a liquidity draw. This formed during the PM session, the New York PM session on Sunday. That's buy side liquidity right there. That's a draw on liquidity. Remember, the markets always seek liquidity first. That's because that's where the pending orders are. And you can see the price movement. And then we got the high. This high right here. This is the Sunday's high. So I'm going to clone that high. Or clone this trend line. I'm going to draw it up to that high. That's buy side liquidity. Here in a few hours, that might be the previous day's high. And after that's a strong bounce. This is what institutional sponsorship looks like. If y'all never knew, and when I ever say that, y'all don't know what it looks like. You want to see the market drop down into a discount or a premium, and you want to see displacement. Displacement means rapid movement, rapid speed in the opposite direction after dropping down to a discount. And look at the consecutive candles. That's showing you and indicating to you that, okay, that's displacement. This little protocol right here is when the institutions come in and move the market. They're in a hurry to get on the up, leave the discount. That's what I mean. They are in a hurry to move, leave the discount, and you can see how the market is moving cleanly. So from the 15 minutes, go down to the 5 minute. This is the current hour. I'm gonna give it another color. Let's say purple. And again, here I am teaching, giving a lecture. This is a whole lecture. So if y'all appreciate this type of stuff and y'all interested in learning, make sure y'all hit that like button, subscribe, and sign up to the Patreon. But this is like this is kind of like one-on-one mentorship. And look how the market is reaching for that liquidity. Go down to a 1 minute. This is what you call, okay, let me ask y'all this in the chat. What market profile is this on the 1 minute time frame? What's the market profile on the 1 minute time frame? Let me know in the comments. What's the market profile? Shout out to you, Daryl. Expansion, buy program, whatever y'all want to call it. They all the same. We're in expansion and it's a buy program. This is a clean buy program. Now, let me tell y'all this. This is what y'all are waiting for on that monthly time frame. When you start seeing the monthly chart, do this right here. And I'm going to pull up gold as an example. Imagine each one of these candles that are currently moving, and this is a 1 minute time frame. But imagine this being the chart on a monthly when each one of these candles take 30 trading days. That's when the flip has been switched that y'all like to talk about. I don't refer to that, but that's what that would look like if this was a monthly time frame where price is just pushing higher in consecutive months. That's what you want to see. That's what y'all want to see on those higher time frames. We are not there yet. So if I go back out to the 3 month time frame for XRP, we're not there yet. But imagine coming from here and we start seeing like 12 months, which I can't say that's going to happen. But imagine seeing each one of these candles for the next 12 months moving higher like it is on that 1 minute time frame. Right here. Imagine seeing that. There's a small little fair value gap that we just traded down into right there. Order flow is bullish. This is what y'all call tape reading. If y'all watch me Friday, I did live trading with a simulated account or a demo account. I did some live trading, and live or real money, it don't matter because these concepts still apply. So look how the market trades down to that fair value gap right there, which is a BISI. Trade down to it, 1, 2, start moving higher. It's seeking the liquidity above the market. Let me go out to the 5 minute. Okay, go back down to the 1 minute. But that's XRP for now. I'm gonna come back to XRP. And this is what y'all you people that like to try to buy back in and no. You need to adopt a whole new program. We are over here looking at this right here. Short-term trading. Your trades last minutes to weeks. Capitalizing on short-term price fluctuations, technical analysis, high frequent buying and selling, buys and sells, asset quickly, short-term gains. And you're pretty much putting on more risk with more market volatility. That's what we're looking at. Leave that page right there. Come to XRP. Trading back down. Let me go out to the 15 minute. Darryl, you said that you have a hard time keeping your composure. It's hard to keep your composure when you know this information. I ain't even gonna lie. It's hard to keep that composure when you understand how the market is booking price. It's definitely hard. So if you wanted to be a buyer, you should have been buying down here at discount, and now you would be up in profit. But let's say you missed that. This is a 15-minute time frame. If you missed that, you got to drop down to lower time frames and potentially catch a discount to continue higher. So that's what I'm doing. I need to zoom out to the 5 minute. 5 minute time frame. We have a 5 minute fair value gap right here. I'm going to highlight that. 5 minute BISI in the form of a fair value gap. So if we drop down lower, it's going to want to reach for this gap in price right here. In the meantime, let's go ahead and look at these other assets. Let me go ahead and pull up XLM. Before I pull up XLM, I want to pull up the dollar. I got to talk about the dollar first. All right, y'all. We are at a critical point for the United States dollar. It's starting to show a lot of heaviness, a lot of weakness. And matter of fact, that could potentially be a good thing for people that own assets. That would be a risk-on environment for the United States dollar. You already know the tariff situation and all these things. Them might coming in wanting to lower the interest rates. Money is becoming cheaper. So if they lower the interest rates, they will bring down the price of money. And also that gives them a reason to print more money. And, you know, inflation will increase. So if they start printing more money into the economy, that's going to risk on environment. And that's why I say if the dollar, this is what I'm paying attention to. This is a 3-month time frame. Dollar trading up to this premium level and then it dropped down. This sideways consolidation for the dollar has been years of sideways trading. Now it can start slipping lower. This is a 6-month order block that I got on the 6-month time frame. But below that, we got these liquidity pools down here for the dollar. If the market drops down to these liquidity pools, that will be a good environment for crypto stocks to continue higher. That would be a great environment for crypto and stocks to continue higher if the dollar in the next several months and years wants to reach down for these levels. Let's see how fast and rapid that they want to drive price down lower. Let's see. What's up, Center? Appreciate you joining, man. Shout out to you. Shout out to you. What you bullish on, Center? Let me know what you bullish on. Are you bullish on the fact that if the dollar sells off, that's good for crypto and stocks and commodities? Let's go look at gold right quick. Let me pull up gold. Let's pull up gold. So again, normally when the dollar sells off, gold continues higher. When gold sells off, which it ain't selling off, the dollar goes higher. So again, money being moved around. They devaluing the dollar, making money cheaper so that they can throw all that extra cash into assets, commodities, crypto, stocks, real estate. That's what they want to do. So look at gold continuing higher, monthly time frame. And what I was saying earlier with XRP on that 1-minute time frame, look at gold. Look at gold, consecutive months just running higher, higher, higher. Gold has never been this damn bullish ever. It's been stable throughout the decades, but it hasn't moved like it's moving like currently. It's right now it's a low resistance liquidity run for gold on a higher time frame. Low resistance. Nothing really slowing it down. This is my first time pretty much after knowing how to analyze and read the markets. This is like the first time I ever seen the market do this outside of Bitcoin. But even when I knew about Bitcoin, I didn't know I didn't know technical analysis like I do now. So being able to witness gold doing what it does right now, this is a beautiful sight because damn, you know, the algorithm for gold is like really pushing price higher, higher, higher. And it's doing it in a low resistance liquidity condition compared to this right here, which this was your opportunity to get in the market for years back in 2020. From 2020 all the way to 2020, let's say 2023, you had about a 3-year window in this consolidation to accumulate gold. And in previous years, you could see the high resistance liquidity conditions where you can see that choppiness in gold, that sideways trading. And then even when it ran up higher during these years right here, it did it in a slow, high resistance fashion. For example, you can see the run up right here. It was running up and then it did this wild shit where it just retraced and then it started wicking and chopping, but it retraced real deeply. So that was very volatile for gold. That was during 2008, the 2008 time period. But Gold has never traded like it is currently trading right now, and it's in a hurry. It's trying to get to where it needs to go. They flipped the switch on gold, so this is what flipping the switch looks like for this asset, which is gold. Let me see what else. That was XLM. I covered XLM. Did I cover XLM? Yeah. No, I didn't. XLM 3-month time frame, currently 24 cents. It's trading inside of a monthly fair value gap, so XLM is still at a great price. If you drop down to the monthly, the blue highlighted area, that is a discount. We're at the premium end of the discount though. You see this current candle, and then you see the midway point of the blue highlighted gap. That's the premium end. And they gave y'all one opportunity, which was last week, where it dropped down, went below the midway point of the monthly fair value gap, and it dove into that 3-month gap. And they gave you one opportunity to get into the market. One opportunity. And it's still at a discount, but the discount, the deeper discount was last week. Now, do we come down lower? Well, I would have to go down to lower time frames and give y'all that. I'm gonna say that for the Patreon. If y'all want that type of info, click the link in the description. I already know, I got my bias, and I can tell you where the price is gonna go. I'm gonna say that. Let's go ahead and look at. Let me see right quick. Let me bring up. Let's bring up XDC. Bring up XDC. Oh yeah, XDC on the move, y'all. XDC. Okay, so XDC is kind of leading the way. And then I'm gonna go ahead and pull up H-bar. Let me pull up H-bar right quick. Yeah, every one of these markets are showing similar price action. So don't be surprised that these markets rebound and start moving higher. Do not be surprised, because I'm starting to see the narrative around the tariffs and shit and Trump. Like, some say it's a good thing. Y'all let me know in the chat. Do y'all think the tariffs is a good thing? Is it having more of a positive impact on these markets? Or do y'all think it's doom and gloom and that, you know, BRICS is going to rule the world and whatnot? Y'all let me know in the chat, because it's pretty much 50-50 down the board. During Trump's first administration, the pandemic hit, and the markets was down, and then they ran wild after a few months, I guess. Like, Bitcoin performed real well during the pandemic years. Lawrence, you say all good? Okay. But this is XDC on that 3-month time frame. XDC on that 3-month time frame. You see this 3-month fair value gap, which I highlighted. Same with XRP, same with XLM. But look at this current candle. That's showing a lot of strength. How we drop down here. This is exactly what I want to see if these markets are going to be strong and showing strength and push higher. We offered you one opportunity to drop down the discount, 6 cents. Shout out to y'all if y'all took advantage as well. That was your opportunity. Right now, you're going to be chasing price. I would not be trying to chase. Well, XDC is so cheap that I could see some of y'all wanting to chase it. But it's currently at 7 cents, but the discount opportunity was at 6 cents. Pull the trigger. Now we're moving higher. That's a 3-month time frame. Let's go down to the monthly. From the monthly time frame, fair value gap. Drop down there, discount, top of the gap. Now we're pushing higher. Let me go down to the weekly. On the weekly hot time frame, it's very obvious and clear. It's very obvious and clear. What side of the market do y'all see XDC for the current week, which is our bias? What's your bias? Do y'all see it going higher, taking out the previous week's high? Or do y'all see it coming lower, taking out the previous week's low? Y'all let me know in the chat for XDC. Center, we got to wait and see, Center. We got to wait to see. Shout out to you, Daryl. It's very obvious. It's very obvious to me where they want to drive price. And we're definitely going to want to, this week, take out the previous week's high. The previous week's high was 8 cents. So you better believe sometime this week, you're going to see it flash across your screen, hopefully earlier or sooner than later. Oh, XDC is at 8 cents. And then this is a lot of strong displacement. I see a lot of strong institutional sponsorship in XDC. Look at the consecutive days. 1, 2, 3, 4 consecutive days of price wanting to reach higher for XDC. So again, coming off a market maker sell model, down a discount, early stages of a market maker buy model, going higher, taking out old highs in the market. So definitely be paying attention. I would not be trying to chase price, but y'all gonna do what y'all want to do. And I'm not here to tell y'all what to do. And the same thing for XDC. If I go out to the 3-month time frame, I was very heavy-handed here recently on XDC. I laid my pause on HBAR. Excuse me. I was very heavy-handed on HBAR, and I had to lay my pause on HBAR. So drop down a discount. That was your opportunity to accumulate. Now we're starting to move higher. It's up at 17 cents. I got in at 12 and 14 and 13 cents. So now I'm all green in profit from my last purchases and my last position on HBAR, because we're over here using precision trading. This is a weekly time. Well, let me go down to the weekly time frame. Even for HBAR, what side of the market do y'all see price drawing to? Coming up, taking out previous week's high. Well, look how close last week's high and the high from 2 weeks ago. Look how close those highs are. If it's going to want to come up and take out last week's high, it's going to go ahead and go up and take out the high from 2 weeks ago as well. And it's most likely going to want to trade back up into this monthly fair value gap in blue. So definitely be paying attention to that. And I'm going to keep it simple today, man. Let's go look at BTC. Look at BTC. Still hanging around at that discount. Oh, it did do this. I missed that. So check it out. It didn't come down to this order block on the 3-month time frame, but it did dropping down into this 3-month fair value gap that I'm about to highlight. It did drop down into that. That's a discounted opportunity right here. You see this large candle, look to the left, this wick high, and you look to the right, that wick low. I'm gonna highlight those levels right there. And you can see how the current candle, which is the second quarter of the year, see how it dropped down? It opens right at the midway point right here, drops down into that 3-month fair value gap in pink, uses it as support, and now is moving higher. I never was bearish on Bitcoin, not just yet. I know there's a lot of narratives about it, but I pretty much forecasted all these moves. It dropped down to the monthly. You see that monthly level, that blue level? I was referring to that back in November 2024. And again, dropping down into it. And hey, I'm going to tell y'all first, and make sure y'all remember this. I see these markets flipping bullish, because all this panic and fear that they got going on right now, that's all a distraction. And remember, I said that shit. Did y'all doubt me last time? I'm sure a lot of y'all doubted me last time, but here I am saying it. Some kind of catalyst, which I'm already seeing it in price action, but some type of catalyst is about to push these markets higher. I'm sitting here saying it. Y'all know algorithmically we're sitting at a discount for this particular Bitcoin right now, this Bitcoin chart. But I showed y'all across the board, XRP, XLM, XDC, HBAR. And I'm sure if I look at other assets, it's going to look very similar. And also paying attention to the dollar. If the dollar starts to sell off, that's going to be a risk-on environment for commodities, assets. So definitely be paying attention to that. And again, forget the noise. Tune down the noise. Cancel out the noise. These markets are bullish. They never was bearish. These markets never went bearish since we crossed over into 2025. All they did was drive it down, offer those discounted opportunities. So tune out all the noise. So Bitcoin just hanging out inside this gap. Again, we dropped below the midway point. Anything below the midway point is a discount, a deeper discount, I mean. And now we're in the premium side of the fair value gap, which is a premium discount. So sponsorship will push this higher and start coming up, taking out the all-time high for Bitcoin, which is 109,000. So that's Bitcoin. Yeah, the dollar, the market just opened. So let's go look at the dollar again. Let's look at the dollar. 3-month, go down to the monthly. On the monthly time frame, we got 16 trading days left. And yes, I already can tell by looking at the candle. We're going to start trading through this. This highlighted area, 3-month fair value gap for the dollar. From the monthly, let's go down to the weekly. And I can tell you how it opened up, that this is showing heavy weakness. So I'm going to ask y'all in the comments this week for the dollar. Do we come down and take out the previous week's low or the previous week's high? Because that's where the pending orders are in the market for the dollar. Y'all let me know in the chat. It's very simple. Ain't this simple to y'all? I mean, it's not. It's kind of elementary. But all you need is training and repetition. That's all y'all need. Y'all need training, and repetition. Make sure y'all hit that like button, subscribe if y'all brand new to the channel. Subscribe to the Patreon as well. Shout out to you, Lenny. It's very simple. Lenny, you be on point, man. I check your analysis out. You definitely on point in the Patreon. It's just good to see that you working with the concepts and applying it, because at some point you're gonna be telling me what you're gonna come up with your own analysis, and we're gonna be sharing analysis, and I ain't gonna be able to tell you nothing. So keep it up, Lenny. I appreciate you staying tuned in and looking forward to these live streams and subscribing to the Patreon. But most definitely, sell side liquidity right there. I'm going to be looking for a price to come down, take out the previous week's low. We go down to the daily time frame. It is Sunday. Well, it's currently Monday in Asia. You already can see that we opened up right here, and we're trying to reach lower. Now we got a small volume imbalance right here. This is a volume imbalance. So be looking out for that right there for the dollar. But so far, I think we sell off on the dollar. Frozen, shout out to you. Say you just got home. I watched the replay to catch up. Boss Vision for the win. Okay, appreciate you, Frozen. Shout out to you. Let's go down to the 1 hour for the dollar. Oh yeah, heavy weakness for the dollar. Heavy weakness. Let me highlight this sell side liquidity right here. Sell side liquidity below the market. That's the previous week's low right there. So I'm gonna be on the lookout for that to come down lower. And I think that's gonna be it. Let's go look at the NASDAQ. Let me check out the NASDAQ. We just opened up for the NASDAQ the week. The market doesn't open until Monday. Again, if I go out to the 6-month time frame for the stock indices, this sell-off and that panic in the market, that shit was just programmed into the market. That was already baked into the price action. What it did was, I'm gonna ask the chat, y'all participate. This candle right here. What is this candle right here? Do I already have it highlighted? No, I ain't got it highlighted. I'm gonna highlight that right there. That's a bullish order block. If y'all don't know, that's a bullish order block. There you go, bullish order block. That is a discount array. It's a PD array. When I say PD arrays, what does that stand for? That means these are institutional reference points. The institutions leave behind reference points in the market. If you know that the markets are algorithmic, they leave behind reference points. So that's what a PD array is. Premium discount arrays, which are technically reference points. So that's a reference point that they leave behind. Look at this candle right here. Do you think it's random? This candle right here. Do you think it's random that it opens up right here, trades down, touches the order block with precision, just slightly pierces it right there, and then boom, takes off higher. And then, okay, the second quarter of the year, or the first half of the year, because this is a 6-month time frame. First half of the year has been kind of bearish for the stock market, panic in the market, etc. Now, are we done? I don't know. Let's see. Again, we at a critical point. Things can flip around real quickly, and I kind of you don't know what's going to be the wild card. But not only did it drop down, it didn't touch the order block yet. It touched it right here, but it didn't come back down to it and refer to it. But what is this right here? Y'all tell me in the comments. What is that right there? There y'all go. It's a BISI. So y'all might have not caught that one. Some of y'all probably did. Yeah, it didn't come back down to this order block, but it sure did come back down to this fair value gap, this small little gap in the market. It traded back down to it and referred to it. And not only that, y'all, what is this? What is this wick right here? it's technically called a tail. So I haven't talked about that yet, but I call them all wicks. I like calling them wicks. But the trend line above the candle is a wick. The trend line below the candle is a tail. But I'll just call them wicks. That's my preference. But yes, it's a ghost pool. This is a ghost pool. So not only did it trade down into this fair value gap, it also traded down into this ghost pool right here, which is the opening price of this candle down to the low of the wick. And look at the precision. It's not random that price action trades down there to those levels. It's not random at all. So definitely not random. You can see the top of the ghost pool, the 0.75 level, the midway point, which is the midway point of the wick, and the lower quadrant, which is the 0.25 level. You could have dropped limit orders on each one of these levels, and then look how the market reacts. Boom, snaps back higher. Nothing bearish about that. That is very bullish, in my honest opinion. But how do we close this 6-month candle is key. Go down to the 3-month. And again, look at that. Look how price snapped down there and it snapped right back up. So let's just see here in about 2 months or 17 days how we close this candle. It could be, this candle right here could flip green. I done seen it before. But let's see. This is a long-term time frame. And then from the 3-month down to the monthly. And let's see how we close this month. We're trapped between, I'm 50-50. If I had to flip a coin, it can either come back down lower or it can continue to go higher. So it's 50-50. And you gotta continue, you gotta pay attention to the narratives going on out there in the streets as far as economic news, fundamental news. So that's the NASDAQ. And then that's XRP right there, trading back down into this 5-minute fair value gap, which is a discount. Go out to the 15-minute. Okay, there's a 15-minute gap, so I'm going to hide that 5-minute. That's why you always want to zoom out. 15-minute fair value gap right there. And we just traded down into it. So that's a 15-minute BISI. And I have nothing else to pretty much talk about, to be honest, as far as like, it's Sunday. So again, it's Sunday. My sentiment, y'all tell me in the chat, what's my bias of the week? Because when I come live later on this week, we're going to talk about if it happened or not. So what's my bias? Did y'all catch my bias? And if I'm wrong, which I'm not, you know, I'm okay with being wrong. That's part of analyzing. When you start learning these concepts, you're gonna be wrong a lot. But if, let's say we don't go bullish and we come lower, then I will come on here and show you how we can get in sync with that. But right now, my bias is higher. Y'all are correct. Bullish, higher. There y'all go. At minimum, don't forget that neither. We can blow beyond previous week's high, but we like to reach for the low hanging fruit. So the low hanging fruit would be previous week's high. That's the low hanging fruit. Now anything above that, that's just cherries on top. And you always want to consider any price going beyond what you thought it could go. So you always want to consider that as well. But that's going to be it for this evening, though. I ain't going to lie. Make sure y'all hit that like button. If y'all haven't subscribed yet, come over here to the Patreon. Sign up if y'all want to learn the basic concepts of technical analysis. Learn these skill sets. You need a foundation. A lot of y'all need to learn how to be independent. Stop relying on other people. So I'm over here giving y'all those lessons. Might have some time tonight, do some extra videos, push out some more content for the Patreon. Definitely been busy. I was busy this weekend. And you got to kind of have that work-life balance. Even when you're analyzing the markets, you always got to have that balance of life. So I ain't gonna lie. I was kind of, you know, when you do this, you're going to get burnt out. You're going to have some burnout weeks, some days where you just burnt out and you just got to pretty much reset. And you do that with pretty much anything in life. You got to reset. So this weekend I had to pretty much reset and just get my thoughts and my mind together and stay away from the markets. But now here we are. I feel refreshed, and I'm ready to get back to it and analyzing and looking for opportunities. But if y'all are interested, come over here and sign up to the Patreon. Most definitely. But I definitely appreciate y'all joining. Shout out to my new subscribers. I appreciate y'all. Y'all gonna definitely get a whole lot of value over here on my live stream. But y'all look out for me probably tomorrow, But I appreciate y'all time on this Sunday. Hopefully this was insightful for y'all. Definitely go back and watch the replay if y'all missed it. Sign up to the Patreon, hit the like button, comment, subscribe. But I'll catch y'all on the next one. Peace out.